Ladies and gentlemen, welcome to the Fintech Frenzy. I don't know why I pay for this expensive lighting system and nothing freaking works. I don't know why my lights aren't turning on. Not a clue. Welcome. Hopefully everyone's having a great day. We got some absolute banger news to talk about today. For the old folks, that means good, big, whatever the heck you want to call it. We got some news to cover. Okay. It's going to get fun. It's going to get absolutely fun. I have three stories on SoFi, and then another 2 and a bit stories on Robinhood. And then we're going into the SoFi Weekly at 10 p.m. All right. And maybe between now and 10, I can get these freaking lights to work, but I'm going to look very heavily lit on one side rather than the other. I know you guys probably don't care, but for someone that's putting this much money into it, it's just, that's how I feel. All right, let's jump into it. Okay, I saw this piece from Stock Goat YouTube channel. And excuse me, I just need to fix this. Okay, I saw this piece from the Stock Goat YouTube channel. Kyle, good guy, love what he's doing, spreading the SoFi gospel, okay? But ARK Invest, Cathie Wood sold. This was not clickbait. He goes through talking about how, Cathie Wood had sold out of the company. You guys, show of hands, who saw this, who was disappointed to know that Cathie Wood sold SoFi. I sure was sad until I did some research and I found out she actually didn't. She didn't sell. So now the information that he's getting is not false. He sees that SoFi, the amount of shares that she held in Q1 versus Q2 has gone down. But it's an ETF. We have to remember this. So let me go ahead and bring up RK and ARK Fintech, which is the two funds that she holds SoFi stock in. All right. Let me just go ahead and bring this up really quick. All right. So we'll bring up our trusty Moomoo here and take a look. So as you can see, RK at the time of, where's April 1st? April 1st, this stock, if I'm just looking at the chart very roughly, I don't want to go in and actually break out I can see it at the top. The open and the close were about $50 a share, okay, for this day. And then on July 1st, the opening day of the next quarter, it was at $44 on open. Yeah, $44 on close. So it's gone from $50 to $44. So Cathie Wood in her ETF does buy and sell SoFi, and she can adjust the weighting of her fund and play with the different stocks, but the overall size of the fund is determinant of who is buying and selling this portfolio. So she can't actually control the amount of money that's actually in it unless she buys or has good performance or has good marketing or something like this. Okay. And they are great marketers. That being said, in terms of her actual weighing down the position, that has not happened. She's only gone down because people are not buying as much as they used to. There's net selling of her fund between those two time periods. And so, yes, she had sold more SoFi shares, but that's not Cathie Wood's decision. Okay. That's like saying she is bearish or making bearish plays on every single one of her positions, which for the most part, probably every single one of them has gone down, unless there has been some position in her portfolio that she's added to more than the amount of the total fund has gone down. Okay. So she is still a net buyer of SoFi shares. Hopefully that clears some things up for you guys. Cathie Wood's still on team SoFi, still on team Anthony Noto. All right. In other news, I wanted to cover this. Now, I am not going to cover the entire story or anything. I just saw this and wanted to bring light to it because I think it's very important for retail investors to understand where you're getting your news from and you know, maybe don't trust everything you see, right? So let's take a look here. I just want to read the headline. Short seller Andrew Left of Citron Research was charged with fraud by prosecutors, says the SEC. Okay. This guy right here, very famously shorting some very particular stocks, even like GME, for example. He's got himself in some hot water in terms of good positions, bad positions, but most importantly, some of these things he had actually used false information to illegally profit from manipulating stock market activity. Good. All right. That's great. Love it. So can't trust even the shorts these days. Can't trust the bears. Who can you trust? Trust yourself. Do your own research. So that's exactly what I was doing my own research. And I came across the moral of the story today. The large thing, the reason of the title, everything. Did SoFi get a major unnoticed update? I had called people to make sure that what I was seeing was real, and if I am speculating just a little too hard here. Okay. But you guys tell me, you let me know for myself whether I am freaking out or not. In fact, I actually am just going to bring up the app itself. I have a little screenshot, but why don't we just go through the app? Because there's other things that I would like to show off to you guys in this one. So I use a little app sometimes. I mean, I rarely do. That's called App Figures or App Tracker. And it'll give us some indication on some companies that we're looking at that they'll track, like, top apps, stuff like this. So, for example, if we go in, I'll just show you here. Top ranked iOS apps, right? If we just go in, choose finance, we can see, like always, in terms of the free ones, these are the ones that are really growing very fast, is the free category, obviously. Cash App, PayPal, Venmo, Zelle, those are the ones that you'd expect on top, right? That's not going to be a crazy answer. Now, a little bit lower than what we're used to seeing, SoFi at 45, okay? Now, it says for the estimated downloads, this is also not a very exciting statistic right here, 120,000. Now, it won't let me go back. If anyone has a membership to this thing, it costs like something like $400 a month. I am not paying that. I love you guys, but there are many softwares out there that would better help my investing than $400 a month. So I get to see June. And if I knew this earlier, that they track it like this, I would be doing what I do with the, SimilarWeb and all these things and try to track estimated downloads. But it does say it's down, so I'd like to see what the trend is. Please, someone out there, let me know. Let me know. Anyway, as I was going through this, I found, where is it? Versions. All right. I went to version history. I want to show you guys this when it loads. And if it doesn't, I've got a screenshot. So we're fine. Okay. Updated 2 days ago. So for the longest time, and they've been updating, once every couple of weeks or so, all the way going through, updating all these little bug fixes. 2.187, 2.188, 2.189, all the way through. And these could be minor bug fixes or something like this. But 17 days ago, we got a minor bug fix. And then 11 days ago, we went straight to 3.0. Am I crazy here? What the heck is going on? So usually, and I even called Tevis, our resident product expert, okay, the dude who actually works in product, runs a team for a software company. I said, what does this mean? Like, obviously they don't actually publish what's in their notes, and we can't read too much past just their internal sort of indicators for what these updates mean. But this could be some sort of architectural, like back-end changes, something along these lines. These could be new launches for products. But usually, whenever you're switching the actual version update from 1.0 to 2.0, 2.0 to 3.0, it's usually a very large step. And so I thought that this was a pretty big jump to go from 2.2 to 3. I wonder, is this a Technisys thing? Is this a small to mid-sized business thing? Is this a new credit card system thing? I don't know. I don't know. As of 11 days ago, I just stumbled across this. So is this am I reading into things? I don't know what to think. I don't want to make you guys think that this is something bigger than it is, but obviously I want you to be made aware that something on the back end is showing SoFi engineers that this update was very different than the ones that have been seen previously. Okay. Now, even then, we can see there are a ton of updates. It's not like SoFi's not moving here. Even in these quarters where they're not releasing new products, they definitely are. They are posting. They are updating, but they never give us insight into it. But yeah. Tanner, you can also go on the iOS store to see a cleaner format. Sure. I mean, it's good enough. It's good enough, brother. Then I got to go on to two different things, see the iOS downloads and then the Android app store as well. I'm fine with the tools I'm using. But yeah, those are my speculative things that I'm seeing before earnings. And we'll see. Cathie Wood did not sell. And SoFi is now in 3.0. Don't know what that means. Let's continue on with some news here. Now, Mario on Twitter had also posted this today. I should have just went out and got the Reuters article for you guys, but for the most part, it gives us a clear insight into what the article was even saying. Fed eyes September rate cut as inflation nears their target. New data showing inflation edging closer to its 2% target. The personal consumption expenditures, or PCE, price index rose just 0.1% last month, indicating a year-over-year increase of 2.5%. With the labor market also slowing, the Fed is cautious about maintaining high borrowing costs, and analysts are predicting that the central bank could start cutting rates soon, depending on upcoming inflation and employment data. Now, this is not going to make or break what I think for rate cuts. I've been watching the Fed Watch tool, and I do believe that rates will be cut in September. I'll just bring that up now just to see how markets are reacting overall. But yeah, I mean, they are as positive as ever, I think, that we've ever seen right now. So 100% chance of easing, 11.9%, the highest we've seen for a 50 basis point cut, and then a 0.4% for a 75% or even 100 basis point cut. And that's also the highest we've seen. We saw 0.3 before. So very, very interesting. Will SoFi benefit? I mean, probably greater than most of the companies in my portfolio, right? You have to think there are a lot of global companies or international businesses that might be partially affected. SoFi, all their loans are in the United States, fully affected. That means that whenever there's bad, there's extreme downside, but whenever there's good, there's amazing upsides to come. I don't want to go through an entire recap, but what exactly does this mean? SoFi deals in a ton of loans, okay? They have been giving out those loans at extremely high interest rates or coupon rates, right? As rates start to get cut, there are going to be a bunch of banks that will not be able to give out loans for those same high coupon rates because the market's going to come down because cost of funding is coming down, right? You don't want to get greedy or else competition is going to eat you away. So the entire market shifts to giving lower interest rate loans that are affordable, that get past the cost of borrowing and all these sort of things. But there's still a great deal of loans that are outstanding at those very high interest rates. So either SoFi holds on to them and they enjoy that rate, or a bunch of companies that might not be able to procure their own loans end up asking SoFi if they can borrow the rights, the payments of those loans. They'll take on the risk, they'll take on the payments, but they want those loans. Fixed income products. They are a real asset, the same way that equities are, or stocks, or whatever you want to call them, right? So the lower interest rates go and the lower that everyone is now servicing their loans, if you continue to hold up these really high interest rate loans, they are worth much more. And vice versa, right? That's how a lot of banks got killed, is because they were end up holding very sort of long dated loans at very small or low interest rates. So crazy world we live in, but SoFi is here to benefit. If you want the real quick thing, interest rates are going to help SoFi. Some people say the opposite, like the benefits on cost of funding and these sort of things are not going to nearly benefit as much as like things like personal loans are not going to be as useful because credit card rates are going to come down. Baloney. Okay. SoFi used to be a student loan business. They shifted to personal loans. There's not a little bit that I believe that they could not pivot back to student loans, home loans, all of these other products that do amazing whenever interest rates also get cut. Now, it's the same thing of whenever we talk about like, I don't want to get too much into it in terms of like money flowing into safer assets, whether that's money market funds or bonds, stuff like this. But once those start to come down in terms of interest rates, I mean, the one of the banks that I use, I talk about Wealthsimple a lot, just where I store my money. They just cut their interest rates today. They went from people getting 4.5% going down to 4%, and people that are getting 5.5% go down to 4.5%. So Bank of Canada just cut their rates, right? So second 25 basis point cut. You think America's going to follow? They're not always in tandem, right? But they do flow in similar directions. Good news or bad? I think the only bad news today that I've shown off is the App Store downloads and the App Store rankings are definitely not where I'd want them. 45 is just like, what the heck is that? Whenever Taylor Swift was in town, we were like at 19, 25, somewhere around there. That was unbelievable. Member counts were at 700,000. That's why, like, there's a lot of people who come in and they're like, oh, we're going to get 800,000 new members this quarter. It's like, based on what? What are you seeing? A hunch? You got a little butterfly in your stomach? What are you talking about? I want to see something that angles us to that sort of belief. Right? Let me take a sip of my coffee here. It's just melting in this ice. I feel bad for it. I got to drink this. I have realized that my finance teachers have not taught us anything useful YouTube University has. Well, I appreciate you saying that in my channel. And the comment before that, he said, Tanner is getting booty tonight. So priorities are all set in terms of what you're learning here. If finance YouTube has taught you anything, it's that Tanner's getting booty tonight. Well, you are wrong. My girlfriend is sleeping over at one of her girlfriend's house. So I'm not. Thank you to Moomoo for sponsoring this channel. Tanner's got to have a little bit of a goofy side, But yeah. All right. Yeah, Robinhood. So let's talk some Robinhood. First, can I show you guys a little video? So if you guys don't know, Robinhood has recently acquired a company called Pluto AI. And I can't wait to learn more about this business. Going to be very interesting, but yeah, lots of fun. Okay. Let's see what Pluto has to offer.
Welcome to Pluto. Reach new heights with your own AI investing co-pilot, Plato. You can take to the skies with an arsenal of tools for financial research, market analysis, and automated trading. Let's talk to Plato and find out what's happening in the markets.
Hello there.
Seriously, though, does all the AI companies also have to use like AI voiceovers and stuff? Like, do these companies have any employees? I honestly want to know.
I'm Plato.
I'm not just talking about this Pluto thing. Like, listen to the girl's voice as well. That's not a human.
Hey, Plato, what's the big market news this week?
I am reading news stories from today. First, there's an overheated market and lingering inflation warnings from Ford Asset Management. At the same time, the Federal Reserve is expected to pause rate hikes at their June meeting, but future outlook commentary will be crucial. The S&P 500 has entered a bull market, but the rally is driven by overvalued stocks, raising concerns. And let me know if you need any further insights.
That's really interesting, and maybe we can build a strategy to take advantage of this situation. Can we buy some of the top stocks and SPY if they beat earnings?
Great idea. I am creating a strategy called Earnings Beat Bonanza that buys 10% of the top stocks in the S&P 500.
While we're watching this, let's watch it with a purpose, by the way. I'm not just showing you guys some B-roll here. I'm trying to show you guys the capabilities of this product while also trying to imagine how this fits into Robinhood. Okay? Let's get a little bit imaginative here.
If they beat earnings estimates, your automation is ready to review, edit, and activate. Let me know if you have any questions.
I do have a few more questions. Can we test this strategy during the first half of 2021?
Yes, I'm running your test now. I am generating the data and analyzing the results. I've tested your strategy from January to June 2021. Your strategy underperforms the SPY benchmark by 13.21% and has a high cash utilization issue. It seems this strategy could use some fine-tuning to improve its performance and cash utilization. Let me know if you'd like me to make any adjustments or explore alternative strategies.
Thank you, Plato.
I'd be super interested because the spikes on this chart are just absolutely abysmal. That is it actually running the proper like this is what they used in their advertisements, but like just because some of these especially financial analyst tools, you'll see some things where you're like, look at a piece of software and it's like, oh, you know, SoFi's revenue last quarter was $1.1 billion. And they're like, no, it wasn't. Like, I don't even know how they got that number. So I'd be interested to see if the test that this AI was running was even correct to the strategy or if it isn't. I mean, there's a lot of stuff that AI can do going, look, we finished, it's done. And then you look back and you're like, how did you even get to this answer? And then you correct it and you're like, yes. Or you tell it that it's wrong. And then it goes, yes, sorry, I was wrong. You are right. And then you're like, all right, well, I appreciate me doing the work for you. So the correctness, the hallucinations, those still need to be corrected. I'd be interested in seeing how it's unperformed so greatly, and then this massive spike at the end, just, I don't know. Like that chart that they used in this thing doesn't look right.
Let's explore the current state of these companies' earnings. Can you show me a bar chart of their total revenue?
I am generating the data and analyzing charts. Voila. I've conjured up a bar chart showcasing the total revenue for 2023 quarter one. Let me know.
Unbelievable, by the way. This would save me an unmeasurable amount of time. This is awesome, but let's, if it's accurate.
Know if you need any further insights.
Thank you, Plato. How else can you help me?
As your AI investing co-pilot, I'm here to help you unlock your financial potential. I can analyze investing data, research and screen for stocks, and even create charts, graphs, and automations using real-time data. Remember, I'm here to assist you, but I cannot give financial advice. If you need help with anything, just let me know.
With endless ways to research, analyze the markets, and even trade directly from your account with as little as $1, join our community today to learn more about Pluto and your new favorite AI investing co-pilot, Plato.
See, they say things like, I can't give you financial advice, but I don't think a lot of people do need advice. People need to understand the facts, right? A lot of people can connect the dots if they understand the dots truly, okay? And if you're working with an investing co-pilot, you could say, hey, what are the tax implications with this strategy versus this strategy? If the tax is higher with one, like it's understandable that might be a problem. How can you lower it, right? How can I lower the tax implications? So someone in the chat said, Tanner, I don't think that this replaces your job. I mean, this is version point, like it's not even launched yet. These are beta products. The idea for me to really understand AI is what is capable with these products and what's the chance that capable reaches like plausible or actually going to happen. And most likely it is going to happen, right? Moore's law has never failed. The the growth in what has happened even in the last couple of years has way expanded Moore's law. With more power comes more capability. These problems will get solved. Okay, so what I'm trying to say to you, Steve in the mountains, is that yes, I do think that these types of products replace me. People need to understand, like a lot of people that I talk to very early on in their financial lives don't understand what, specific accounts mean or do, tax sheltered accounts and these sort of things. Pluto would help with that. And they're not going to say, hey, you should put your money in there, but they're going to tell you what the advantages are. And then you as a human can make your own decisions. And I don't think that people are dumb enough as to not being able to make their own decisions. Okay, let's continue, however, because I got a couple other things that I want to talk about. Crossroads was all over X today, dropping straight bombs. So let's go in and read this. Amazing work from Crossroads, sharing this to all the non-Robinhood users. But Robinhood was doing a couple surveys. Actually, that makes it smaller. But they're just asking, at what price point in dollars per year would you consider an annual Robinhood Gold subscription is? And they're saying, is this becoming too expensive? This is too expensive, too cheap. Why are they asking these questions if they already have a product out with a price? Because they think that they can charge more, okay? Or that they need to charge more in order to offer things like 3% cash back and all this sort of stuff. So I absolutely agree with Crossroads. Take advantage of Robinhood Gold annual prices while you can. They're definitely looking at raising it a bit. Completely agree. They've looked at $7 a month. They've looked at $10 a month. I could totally see them saying annual prices have gone from 50 to 100, but also we have an amazing spending card. We have amazing rates. We have all of these extra products, Pluto AI, all these extra tools that you just simply cannot get, with other companies. So, yeah. That being said as well, Crossroads doubling up on the news today. So I had joined the webinar to, see PayPal's Fastlane product on their PayPal for Business thing. But I never actually put it together that this is probably going to be the day that they actually do a full sort of launch for this product, giving it to PayPal Complete Payments, which is their small to mid-sized business offering, as well as Fastlane integration for Braintree. Now, the more I found out about Fastlane, the more I realized that this has, I think people took way too many liberties, including myself, crapping on PayPal for the whole Shock the World event. But Fastlane is extremely interesting. This is talking about taking the highest throughput checkout, area, guest checkout, with potentially some of the lowest conversions and raising it up to being the highest converting checkout that exists. 80+% conversions is just mind-blowing. Okay. Doing that across 35 million merchants, massive Braintree enterprises across 400 plus million users could bring some real tangible growth to this business. People are pricing this company as if there's no growth coming. Okay. This could be a massive change to the business. Super here for it. Very excited. And Crossroads for finding this and sharing all these details on his free time deserves a thumbs up for that. So I'll be talking to him about that later in the SoFi Weekly, which is coming up in an hour. But yeah, and sorry, that is not talking about the custom ads and all these other products that they're looking at launching as well. I mean, the shock the world comments are crazy whenever you're talking about payments, because there's really nothing you can do to really, blow people away. I don't even think Visa's Flex card, which in my mind, being like a little payments nerd, blew my mind away. But the average person is going to be like, all right, cool. And you just can't throw those terms around. So this very exciting, turning a massive customer base into, you know, a paying ads platform, better converting users, all these sort of things are really the only thing that you should be looking for if you run a payments company. They are doing it right. Right? Apple's getting fined from the EU. They've got antitrust problems. They might need to unlock their NFC. PayPal's right there. Okay? All good stuff. But ladies and gentlemen, that is it for the FinTech Frenzy. 30 minutes on the dot. No real lollygag. I don't even know if that's a term anymore. I felt weird saying it, but you know, lollygagging, like you're just wasting time. Thank you all so much for watching. Really do appreciate your time. But bye for now.